Hello, everyone. Thank you so very much for joining us today for our November 2018 webinar here at the Spectrum Group. As you can see by this title page, we're going to be going over our latest investor confidence indices, as well as some of our most recent hot topic data around midterm elections and Social Security. My name is Randy Wostratzky, a director here at Spectrum, and I'm joined by Kent McDill, one of our senior writers. In addition to those two items, we're going to, at the end of the webinar, talk about our Wealthy Investor Series, a new research package that we've offered here at Spectrum throughout 2018 and that we'll continue to offer to clients in 2019. There's some information relative to the topics we'll be focusing on in the new year, as well as a couple screen grabs from the visual analytics technology that comes along with a subscription to the Wealthy Investor Series. But without further ado, I'm going to turn it over to Kent right now to go through the highlights from last month's investor indices. Kent?
Thank you, Randy. I'm going to discuss the Spectrum Confidence Index for October, but there was not much confidence shown in the poll of investors. The Millionaire Index fell 4 points in October after dropping 13 points in September, and in 2 months has fallen from a very bullish 20 in August down to 3 in October, which is considered mildly bearish territory. The October index was taken the week of October 22nd when the stock market ranged more than 1,000 points from high to low and lost 600 points in one day. Continued wrangling with the Chinese over trade negotiations, combined with concerns over our nation's relationship with oil producer Saudi Arabia after the murder of a journalist with American ties, created an atmosphere of certain uncertainty on a daily basis among investors. At the same time, economic indicators continue to show positive signs in terms of employment, and the Federal Reserve all but promised another increase in the benchmark interest rate later this year, which caused President Donald Trump to complain the Fed is harming the stock market. It's all very confusing and very disheartening for investors who look for direction from the government. October marked one of the rare occasions when the confidence index for affluent investors, those with 500,000 in investable assets, was higher than the confidence index for millionaires, those with 1 million or more in investable assets. The skyrocket index from August, as you see on this chart, which neared the record high for the millionaire index, has clearly been replaced by a sense of dissatisfaction with the direction of the economy among America's wealthiest investors. Investing in individual stocks took the biggest hit among the components of the index, seeing an 8% drop in those investors willing to put more funds into the individual stock market. There was a slight rise in investing in stock mutual funds, bonds, and cash as investors appear to play it safe for the month heading into the true uncertainty facing the markets next week when the nation votes in midterm elections. The Spectrum Household Outlook is a measure of how investors feel regarding 4 components of their household finances, and in October the outlook overall fell by almost 13 points to 17.5, the lowest mark in the last year, as you can see from this chart, and the first time the outlook has been below 20 since June of 2017. The millionaire's outlook is rarely lower than the non-millionaire outlook, but in October, millionaires reported an outlook of 13.67, a 20-point drop from the previous month, and the lowest since October 2016, which was also the last time the millionaire outlook was below 20. The most volatile of outlook components is always the outlook on the economy, and that measure dropped 20 points in October and dipped into negative territory, which is also a first in the past 2 years. The last time the outlook for the economy was in negative territory was in October of 2016 when the presidential election was a week away, and much of the country thought Democrat Hillary Clinton was going to become president. Among millionaires, the outlook for the economy fell below negative 11, a remarkably low score for that component. As you can see from the chart, the outlook for all components fell in October, showing apprehension among all investors over the state of the economy and the atmosphere for investing going forward. I'll now turn it over to Randy to discuss a couple of topics we've examined in our monthly survey of affluent investors.
Ken, thank you so much. So we're recording this today here on the 31st on Halloween, and we're less than a week away from the midterm elections, and certainly there's a lot of discussion and a lot of back and forth from the media and various outlooks relative to what is going to happen, what's going to happen with the Senate, what's going to happen with the House, who's going to potentially take more governorships and things of that nature. But looking at some data from 538, a political prediction website, they say that there's an 18% chance Democrats are going to control the Senate. 82% Republicans will maintain control of the Senate after these midterms. On the flip side of things, in the House, they have it as an 84% chance that Democrats will control the House, with only 16% chance that Republicans will. We must remember these are just forecasts and predictions. They certainly are not guaranteed to foretell the future, as we learned back in 2016. But it's something that is obviously the top of mind for everyone across the country, and in particular for us when it comes to the wealthy investors that we survey here at Spectrum. As you can see, very, very close as far as the overall totals about who's going to maintain that majority in the House, and certainly not surprisingly, the Republican versus Democrat divide is very, very significant. But importantly, I think looking at the independent differences here, is 16% more say that they think the Democrats are going to take a majority in the House in this midterm. Now taking a look here, this is really kind of focusing on, based on the results, what could potentially happen. And again, you see very specific differences between how Republicans and Democrats responded to the question: if the Democrats gain the majority in the House, what will happen to the U.S. stock market? Where the Democrats said that it's going to either remain or maintain the momentum it had, and then Republicans certainly said it's either going to, or it's very, very likely that it's going to lose the momentum that it had during the fall. Even looking a little bit further, as far as if Republicans maintain the majority in the House of Representatives, what's going to happen to the stock market? And again, as expected, you see a very distinct flip in the responses, and certainly many more Republicans think that we're going to have the same level, or we're going to have a continued momentum, and we're going to see a greater rise, as opposed to the Democrats that really thought that it was going to take a hit if Republicans did maintain the majority in the House of Representatives. So what of course does this all mean, and why does it matter when we ask these questions? Well, one thing is for sure: despite the various headlines that have come out and the constant use of the phrase fake news, there's one thing that certainly isn't fake, and that's how much political views impact perceptions of financial markets, and in turn expectations that wealthy individuals have from financial advisors and financial providers. So remember, after the elections are over, as someone serving the investing community, to always try and be diligent as far as contact with clients, whether that is touch points via newsletters, whether that's touch points via updates on your website. Find a way to be in contact with your clients constantly, and especially after the outcome of the elections are decided. Ensure you're as responsive as possible when you have clients that are reaching out. No matter what happens, you're going to have some clients that are certainly going to be a little bit nervous and a little bit anxiety-ridden based on the outcome, no matter what. And what you need to do is make sure that you're maintaining a sense of level-headedness and ensuring them here's what you plan to do as far as the assistance you provide in helping them maintain and manage their financial blueprint, and what you're going to do as you plan for 2019 and beyond. One of the other things that we've really kind of seen here in the last month is the impact of volatility. And volatility is certainly here to stay for the near term. We're seeing 500, 600-point swings. One day we saw a 900-point swing from trough to peak in the value of the markets. And that's only going to continue to drive various perceptions that investors have relative to uncertainty. And kind of building on that, we asked some questions about Social Security. And so that's another aspect of people's financial lives that certainly is very important. And Social Security questions are certainly always hot topics during times of political uncertainty. So what's going to happen relative to Social Security if there is a change in leadership relative to the Democrats or Republicans in the House or the Senate? While that is still to be determined, what we do know right now is that we have a significant amount of people that are taking Social Security very early. As you can see here, almost a quarter of the respondents took Social Security at age 62 or older. And the kind of almost difficult thing to process here relative to the reasoning behind it is almost the concept that they didn't know any better. And you can see there when asked the question why you started taking Social Security, the answer at 46% was, well, they didn't know any reasons not to take it. So this is certainly a big surprise relative to how much folks are not truly educated enough when it comes to taking Social Security. That's not to say that it's inappropriate for some to take Social Security early at 62 or before, some to take it at 66, and some to wait until 70. There's many different variables that come into play, and certainly life expectancy being the main one, but also various income-based necessities that could arise later on in life. But what matters as a provider in the financial services industry is that you do one of two things, and that you're either knowledgeable about the different calculations that need to be made relative to when someone should take Social Security, and then you promote that knowledge to your clients and you let them know, or you find a way to educate them by directing them to a different resource, whether that's a different professional, whether that is the Social Security website. This is something that you no longer can sit on the sidelines for. You either need to know it or need to know where they can find information. And as you see here, you have over 2/3 of those that expect their financial to be knowledgeable or very knowledgeable about when to take Social Security benefits. So again, when it comes to being knowledgeable, you don't have to specifically say, here's the exact age. What you need to do is provide some sort of resource, either directly yourself or from a different avenue, that lets clients know all of the variables that go into making that decision and making sure that they're well educated and completely informed about the different impacts that it can have. Here's just a little snapshot of what we're looking at in 2019 as far as Spectrum's Wealthy Investor Series, which is certainly what we consider the wealth markets industry's most comprehensive analysis of the affluent and high net worth population that we have to offer. On the right-hand side of the screen, you can see a series of reports that we'll be publishing in 2016 every other month on various topics of concern to the way that wealthy investors manage their financial blueprint and the expectations they have of the financial services industry. Some of you certainly are already subscribers to the Wealthy Investor Series. For that, we certainly thank you. Some of you are not, so I do encourage you to reach out to me here at Spectrum if you have any questions about what this is and how it all works. But in addition to the various publications and reports that so many of you who know Spectrum are used to, we also do have a new analytics technology in place that we launched earlier this year. Spectrum's Visual Analytics is a data visualization tool that really allows our clients to filter down on specific demographic variables to better understand certain types of investors and how they perceive various topics. Again, this is just a little snapshot of how our Wealthy Investor Series works. And I'm happy to send a demonstration video along or conduct a personalized webinar for anyone that might want to learn a little bit more. This does conclude the webinar for the day. Please do reach out to us if there's anything else at all that we can do to be of service. On behalf of Kent, myself, and the whole Spectrum team, we thank you again, and happy Halloween.